This is the Analysis in Chains with Nathan Williams and Neil Kieran.
Welcome to Analysis in Chains. Neil, it's been a bloodbath out in the market recently, hasn't it?
Yeah, it's been a crazy 2 weeks. I actually saw a headline on Bloomberg saying that tech stocks are as volatile as Bitcoin. And I was like, what?
That's crazy.
Yeah, it's like, I remember, I think a few weeks ago, they were saying, oh, cannabis or pot stocks are the new crypto. And now they're saying that just like tech stocks are more like financials, like stocks and assets in general are acting like crypto. And guess which asset class is not acting like crypto, Nathan?
Is it crypto, Neil?
It is. Crypto is not acting like crypto, which is very, very interesting, I thought, because everything has been going down. There's lots of panic, all around the world. If you've been following financial markets, it's not that just America went down in the last 2 weeks, like American or North American stocks and equities. We've also been seeing it around the world globally for the last few months, but crypto has been the least volatile out there, particularly Bitcoin. And it really reinforces this notion that we've been hearing a lot about for last year. If you want to have alpha returns in your investment portfolio, you need to have crypto. I think Bitcoin's been the one that most people will push as to help give those alpha returns more because it's been around longer. But again, this reinforces the sort of hypothesis and assumptions out there that institutional investors want to get in here, because if they want to have the most superior returns for their customers, they need to have crypto, to sort of back up their portfolio.
It's interesting, isn't it? Because for a long time, at the beginning of the year and for like a long time before the beginning of 2018, people were saying that crypto is going to be inversely related to the market, that crypto is going to be the new hedge, that Bitcoin would be the new gold, and that as the market became unstable, crypto would become more stable. And we saw the exact opposite of that happen at the beginning of the year. And it sort of blew everyone's hope out of the water, that because Bitcoin followed the market. Now that we're seeing different behavior happening, I'm wondering what the cause is. And my first thought was that, well, there are extraneous factors, right? So at the beginning of the year, you had a giant bubble that was bursting around the same time as the foreign policy of the U.S. started to kick in, as people started dumping traditional stocks and bonds. And as well, you had the introduction of futures in crypto. People were shorting Bitcoin, and that ended up correlating Bitcoin more to market forces. But now the question is, why are we seeing this more inverse relationship, or that was predicted long ago? And I'm wondering, it could be related to the fact that the market is more mature at this point, that people are starting to say, okay, well, maybe this is an asset class that's held on by that's worth holding by the big banks. And now that there's not the same level of bubble that was there in the beginning of 2018, that it's starting to behave more like predicted.
So the thing is about, I would say, any maturing asset class, it usually does tend to be volatile. And that is actually what institutional investors like, because they're able to do a lot more arbitrage. There's a lot more gambling, shall we say, involved as well. And it's a bit more fun. And so if you're a technical analyst in terms of crypto, there has been this sort of predictable curve in looking at the price volatility. And many traders have made a lot of profits just following technical analysis. Like technical analysis isn't perfect, but it is a sort of an easy to use indicator, shall we say. And many people have been using it to just make simple profits. Now, they're not making a huge amount of profits, but if you're an institutional investor and if you're like playing the technical analysis game and you have like billions of dollars to play with, you can make a fair amount of profit doing that. So the arguments often being made is that like this is almost like a new thing that people, institutional investors, want to get involved in because it's an opportunity to make simple money. And but when the volatility is low, the fun is less. And then the question is, okay, well, volatility at the moment for Bitcoin and other cryptos is low. Like, why is that? Like, is it going to pick up again? Because once the volatility picks up again in an upward trajectory, that's when people go absolutely crazy, and this is when institutional investors make a lot of their money. So I think the big question is, will the volatility increase again? Or as going back to your point, is this just a sign of market maturity and it's going to be fluctuating by $50, $100 every few days? And I would argue that the volatility will actually return quite soon, uh, basing this on hash rate. Because I've often been saying that hash rate is a bigger indicator to sort of price fluctuations than most other things. And I know everyone keeps concentrating on the Bitcoin ETF. This is what will help Bitcoin take off and other crypto take off again. And I believe in the past, you had multiple factors contributing to Bitcoin in 2017. You had the fork, then, so people got like, we're getting free crypto based on forks, and then you had the futures, Bitcoin futures, and people got very excited and hyped up about that. But during that period, hash rate was like growing at this crazy rate because Bitcoin price was growing. And I was making the argument that Bitcoin cannot settle. I cannot stop going down until hash rate stops increasing. And if you were to look at a 7-day moving average of hash rate for Bitcoin, it actually peaked on October 2nd and has been steadily dropping down. So we nearly have a month of decrease in hash rate for Bitcoin. And many other crypto has been decreasing in hash rate already. But Bitcoin's like the big one, it's like 53% of the whole market of crypto. Because that's finally started to decrease, I believe that's why we're seeing price stabilization. And I think it will only start to increase once the price will start to increase. And because of the fact that many miners, it's alleged at $6,000, many miners are at break even, and we will get to this point where the hash rate would drop low enough that they're in this profitability mode. And people, like, we shouldn't forget, miners are hodlers too. They want to hodl Bitcoin, but they're in a situation where they can't. And once they can start hodling the Bitcoin, that means that should start to help a price appreciation. So I'm quite sure that now we're going to start to see the volatility increase quite soon, and we're going to start to see the price increase because the hash rate has plateaued, dropped to that level that helps with price appreciation. And has happened in the last two bubbles with Bitcoin. Happened in, I think, end of 2013, 2014. We saw the same thing with hash rate, and once hash rate plateaued, leveled off, we had a price appreciation, and the same prior to that. So now I'm like, okay, this is it. All of the conditions are set, and we should start to see Bitcoin and other crypto take off.
Yeah, I mean, I don't imagine that we would have the same frenzy that we had last year. And because that sort of thing happens only once. And even if people are excited again, I just keep thinking back to mirrors with the internet. Everyone was really excited in the 90s about the internet, and then there was the big crash. Everyone had their web pages with that were only going to make money by banner ads, and then no one bought banner ads because no one clicked on banner ads. And then new business models came up later, and they were very profitable, but it wasn't the same level of frenzy. And I'm wondering how volatile it's going to be. I mean, I could be wrong. It could be that we're going to see a rebirth of the retail investor coming in, every one coming in and putting in $1,000, $2,000 and having it grow to 10x overnight. But what I think is more likely is this move toward institutions where it's actually going to be harder for the average person to take advantage of this. And, you know, I don't like this prediction. I don't, because I really am for the distribution of power. I'm for the little guy being able to invest and to be able to do their own research. I mean, I love that. I think that all of these investor regulations about accredited investors and things like that are really meant to protect large institutions more than they are to protect grandma and granddad from Ponzi schemes, you know? But that said, we're already seeing that the price of Bitcoin is not even completely readable from CoinMarketCap because there are people doing OTC trades in large institutions, and the actual price is probably a premium from what we see as the Bitcoin price. And as the hash rate goes down, we're going to potentially see a spike, but people are doing more homework, and it's more the funds that are investing. And I know for a fact that most people are veering away from a public ICO right now. They're moving more toward private sales to high net worth individuals and family offices and institutions that want to invest in crypto and Bitcoin and future projects. So I don't know. Perhaps we will see a resurgence of the frenzy that we had before, but I'm not holding my breath for that. I think it's going to be a more mature, more traditional market type of investment. And yeah, like I said, I think that that's in a way expected, but in a way kind of sad.
Yeah. Well, the thing is that the frenzy of 2017 could end up being a very unique event that may not be repeated. If we look back on Bitcoin's price history, it creeps up back to previous highs. It doesn't roar back up. So, to get back to 20K as a price target for Bitcoin, yeah, we could see that end of next year, but it's something that will go up, but not with extreme volatility that we saw in 2017. Because in 2017, you had multiple things, like I already listed the hard forks, the Bitcoin futures, but we had this ICO boom that was getting headlines everywhere, and that brought a lot of people to Ethereum. But then once that boom dissipated, a lot of the money that went into Ethereum switched over to Bitcoin. That kind of started the whole pumping process, and then the rest is history. So it was kind of like this perfect storm, and it's gonna be, I think, difficult to recreate it. Going back to your points in terms of regulation, and it's harder for retail investors to buy crypto today as well. But it doesn't mean that we won't see it uh, sort of increase at a rate that is more appetizing for investors. Because for it to go from, say, 6,000 to 12,000, many people may say, hey, look, it's still 33% down on its high of 20,000. But the thing is, it still is up 100% from today. And in a world where many financial institutions are looking more on steady, interest rates are increasing, so therefore the return on equities and other asset classes are going to be reduced. People want to have that alternative, and I think that if you can get 100% over one year or even 2 years with Bitcoin, for many people that's an awesome return and worth the risk. So that's why I can see
You
things may
know,
take off from here.
you're right, Neil. And there is one aspect of this that we have to remember is that even if we don't see the same ICO boom and crypto in general boom that we've seen last year, there is still no way to stop individuals from buying Bitcoin and from even mining Bitcoin, even though it's not really, you know, profitable right now for an individual with a graphics card. And a lot of the base protocols, Monero, same thing. You can't really stop people from it. So that is one thing that sets crypto apart from the traditional investing world and the bubbles of the tech stocks. And so it can very well be that if the price creeps up, we may hit another tipping point and people just jump right back in. But yeah, it may not bleed over into ICOs the way, even if it does hit Bitcoin in a big way. I guess time will tell. So what are your thoughts? Does this mean you're buying up your Bitcoin right now?
Well, I think, I'm not a financial expert. Just want to throw that out there. But
throw that out there every episode.
But I would be a buyer today of Bitcoin, but not with the same anticipation of return as I would have had in the past. And I think what's also becoming more interesting is that you got a lot more companies, doing IPOs or reverse takeovers. So they're becoming public entities. So with Bitmain and now Bitfury doing IPOs, what that would mean is we're going to have a lot more information. It's going to be less speculative now going forward, because we're going to be able to see, okay, how much profits these miners are making, and that makes it much easier to sort of quell the price. It makes it easier to say, you know what, Bitcoin's overvalued. We should therefore, sell or reduce our estimates of future pricing. So I will be a buyer, but going back to your point, I think you're right. Like, the craziness may not return. The volatility could return, but the enthusiasm we saw in 2017, yeah, it's unlikely that will return. And that's signs of a maturing market.
Well, here's hoping to a good end of the year. Have a great one, Neil. We'll talk to you soon.
Take care.